NBC TV 18, celebrating 15 years of leadership.
Good evening. Welcome to Markets Today. I'm Sonia Shenoy in the Mumbai studio, and joining me from the Delhi News Center is Surbhi Upadhyay. What a day it has been for the market. In fact, a terrible Tuesday. That's the only way to call it. 3% down for the Sensex and the Nifty. And Surbhi, we all anticipated a fall at the start of trade because the global cues were weak. But the ferocity of the fall was something that no one saw coming.
Absolutely, Sonia. Hi there. And I mean, you said it. Even I was really surprised to see no buyers emerge in the market. Even after 3 o'clock, there was just no one to catch the so-called falling knife. Let's run through the top stories this evening. It's the first deep cut of the new year. The Sensex tanks almost 900 points amidst a global sell-off, the worst absolute point fall for the index since 2009. The Nifty nosedives 3%. Blue chips sold across the board. Banking heavyweights like ICICI and HDFC lose between 4 to 5%. Metal and oil gas stocks take it on the chin. All BSE sectors end in red.
And it's the massive oil rout that sparks the global sell-off. Markets were jittery as crude traded near a 6-year low on the oversupply glut. The possibility of Greece exiting the Eurozone added to the uncertainty. And all eyes are now on ECB's next move, expecting the central bank to announce a sovereign bond purchase.
A flight to safety sees demand steady for gold. US, Japanese and German foreign sovereign bonds also see safe haven buying. Back home, the rupee tries to hold on to the 63.60 mark.
Well, those were all the top headlines. But before we tell you what's happening on the show today, let's discuss the markets, because there was a huge sell-off in the markets, as we just referred to. The Sensex saw a massive slide, and I don't think anyone had expected this kind of a fall at the start of trade. Anuj is here with us to tell us more. Anuj, the fall was expected because global cues were weak, but I guess the ferocity of this fall was something that no one anticipated.
Indeed, Sonia. To begin with, let's caveat that. To begin with, no one expected that we'll have a 900-point fall kind of a day on the Sensex. But I think the warning signs were there in between the trade when the Nifty was selling off at every 15 and 20 point rally. And then we were discussing this through the day that 8180 to 8200 is the zone to watch out for. The market is taking 3 or 4 times support over there, but the market was looking quite scary. And once 8180 broke, then all kind of margin calls, all kind of stop losses got triggered, and the market had that big fall. So I think in that sense, I was not surprised that we had a second half like that. You remember we were discussing at lunch that this is not the worst case outcome for the market yet. The worst case outcome could be if 8180 is breached, and that's exactly how it panned out. And I think the second biggest worrying point, if you are a bull, is if you see the contribution of today's market fall, the top 6 stocks were all index leader or sector leaders of their particular sector: ICICI, HDFC, Reliance, ITC, L&T and TCS. And they all dragged the market in same number, some 25 points or so. So it was not a one stock or a one sector driven day that we had. It was across the board panic selling that we saw in today's trade. And while all bull market dips are buying opportunities, you don't know whether this is really indeed a start of a sustained correction, or the market is going to have at least a 10% correction, go back to 7800. That's something that we don't know. For long-term investors, you should be looking at buying opportunities. I'm not sure that that opportunity has come yet. Maybe you'll get better levels at some point in January.
But after seeing what took place today, Anuj, are you getting any certainty that perhaps this could be the there's a firm top in place now for the market?
I think I can stick my neck out and say that 8620 is now the peak for this market. Up until at least the January series, maybe even up until budget, or maybe you can have a pre-budget rally that can take market anywhere, Sonia. But for the month of January, in any case, my call was that the market is showing signs that it does not want to go to all-time highs in January. It wants to correct in January and then maybe have a pre-budget rally in February. So 2 or 3 trends are now quite clear in the market. One is that 8620 is the peak for the market, at least for the January series. Second is that there's a good chance that this market is now headed towards at least 7960, which was the December low. And if that is broken, then maybe even 7800, which would complete a 10% correction. So these 2 trends for me are clear. The third trend, which is still not clear, is what happens to the mid caps, because mid caps have outperformed in a big way. The mid cap index till yesterday was at a lifetime high. I don't know if stocks like in the mid-cap basket will correct more than the Sensex and Nifty. That's something that we'll find out. But if the Nifty goes to 7,900, the mid-caps will correct more than the Sensex and Nifty.
All right. Thanks, Anuj, for that. Well, here are the experts that we have lined up for you on the show tonight. Market experts Saurabh Mukherjee, UR Bhatt and Sanjay Dutt will analyze the reasons for the weakness seen in the markets today. And we'll also get you some global opinion from Robert Parker of Credit Suisse. So first up, let's get you some market perspective as promised. Saurabh Mukherjee, CEO, Institutional Equities at Ambit Capital, says that a few days of a sell-off should not be a cause of concern for investors. But UR Bhatt, the MD of Dalton Capital Advisors, adds that global factors like crude will be a key catalyst for the markets going ahead.
Almost every episode of US monetary policy tightening in the last 25 years has been good for the Indian market. I don't think it will be any different this time. FI 15 end target remains 30,000. It's been 30,000, I think, pretty much from election day. Of our FI 16 year end target, we announced our FI 16 year end target around a month or so ago, and that's 36,000. My sense is that policy making is happening. The economy is recovering. I think this steady flow of economic data suggests that we're in the first year of a cyclical upturn. And in that context of policy making, constructive policy making taking place, of an economic recovery, I think it behooves us to continue being positive on India. We've been buyers of the Indian market for the last couple of years, and we're fairly confident, comfortable buyers of India today. We tend not to worry too much about sell-off days like today. We tend to focus on the bigger picture. And as I said, the bigger picture is fairly encouraging.
Issues about Europe and oil. The countries which are directly affected by it are probably not suffering as much as India is. Like if you see, even in Asia except for Japan, all others were hardly down. And even in Europe, I think it is down less than a percentage point, whereas in India it's already down nearly 3%. So I think there is some sort of excess in India as I see it, and more so because as far as India is concerned, I think the domestic economy continues to be probably on the path of recovery.
All right, so that's the opinion on what really was going on today. Let's take a look at the micros now and figure out what was happening in the futures and options space. Nigel is joining, and he was telling us a while back that most of the stocks that were trading in the F&O space today were, no surprises here, in negative territory. Nigel, how bad does it look?
Well, it was a horrid trading session. And just look at the Nifty futures. It was getting sold into all of the trading session. To give you a data point though, a total of around 145 stocks trade in the derivatives market, while 144 ended in the red. So only one stock ended in the green from the Nifty. That's from the 50 stocks as well as from all the stocks that trade in the derivatives market. That's 145, and that stock was the lone ranger in today's trade. We saw buying on HUL all through the trading session, but things look very, very weak. So take a look at the HDIL. That stock has been seeing some buying interest. That one got sold into aggressively in today's trade. We did see the open interest as well balloon up more than 10%. JSPL as well gave away all its gains. That stock was getting sold into open interest over there as well, swelled up more than 11-12%, while SAIL as well did return to the shorting list. That stock as well was down close to around 7% by the time we wound up. Aggressive selling was seen on all these three counters. The Bank Nifty as well, that didn't help anyone's cause in today's trade, because the Bank Nifty did end low. And take a look at the open interest build up. It was up more than 15-16% by the time we wound up. The two heavyweights were there, ICICI Bank as well as HDFC Bank. Both of them ended lower by around 3 to around 3.5% in today's trade. But the open interest didn't really swell up, so that's indicating that there was some unwinding of long positions as well on both those two counters. But take a look at SBI. We did see aggressive selling over there because the open interest ballooned up. The stock as well ended down by close to around 4% odd. Call writing today made you big money. So take a look at the 8,300 call. The premium fell from around 180 bucks to sub 70 rupees. The 8,400 call as well fell from close to around 120 rupees all the way to 40 rupees. But the real final nail in the coffin came in when we saw aggressive writing at around that 8,200 level. That saw the premium fall from around 260 bucks to around 110 rupees. And now, in fact, the call writers at around that 8,200 call, their stop loss comes in at around 8,300 level. So that's clearly going to be a big resistance for the Nifty in the near term. Take a look at the 7,700 put as well as the 7,800 put. Most of these put buyers, they were going ahead, taking a bit of a punt, buying some protection on the downside. But today, they made big money because the premium on the 7,700 put went from 7 bucks to 27 rupees, while in the 7,800 put, the premium ballooned up from around 25 bucks all the way to 115 rupees.
All right, Nigel, thanks for that. And as the markets witnessed one of their strongest falls in the last 2 years, several stocks hovered close to their 200 daily moving averages. Varinder Bansal joins us now to give us all the details on that. Varinder.
Well, thank you so much. I'll be focusing on the stocks, which are technically weak and especially which are trading very near to the 200 DMA mark. This is a list of stocks which are very near or have fallen below 200 DMA, which clearly means that, they are more vulnerable if more fall comes from here. Look at Reliance Capital. That stock was down nearly 6-7%, but is now trading 4% below 200 DMA. SAIL, Hindalco, Bharti Airtel, Wipro, all these stocks fallen, below 200 DMA today, clearly indicating technical weakness. Watch out for stocks like NTPC, GAIL, IDEA, ITC. They are the ones which are just trading at 200 DMA or 1 or 2% above 200 DMA. So it will be very important to see whether they sustain the 200 DMA mark or not. But here's a list of companies which are trading anywhere between 2 to 9% away from 200 DMA, and it'll be important to see whether they will be selling or buying comes from these levels. So watch out for them very, very closely. Power Grid will be one stock to watch out for. Karnataka Bank, Tata Motors, Bank of India, Allahabad Bank, Havells, Arvind, HDFC. Most of the financials named here, but in the mid-cap category, Havells and Arvind could be very important.
All right, Varinder, thanks so much for that. So now let's take a look at the genesis of all this. The rout in the oil market has continued. Prices continue to languish at 6-year lows. The sharp dip in crude prices weighed on markets around the world. In Asia, the Japanese Nikkei tumbled over 3%, while the yen strengthened all the way to 118 versus the dollar. China's Shanghai Composite, however, managed to stay flat. The Hong Kong Hang Seng was down about 1%. The South Korean Kospi was down nearly 2%. Let's listen into some global opinion now on where market experts see this route headed.
We have, in the Eurozone, I think a sustained period of deflation or very weak inflation numbers. And therefore there is investor concern that this year could be a rerun of what we saw in Japan in the 1990s, i.e. a weak economy dominated by deflationary forces.
You've got slowing global growth, which is certainly hurting oil prices. You've got record supply coming out of the U.S. Production last year is ended the year at about 9.1 million barrels per day. That was the high since the 1980s. We just had news that Russian production is actually at multi-decade highs. So this combination of slow global growth, supply to the U.S., and a stronger dollar is really crushing oil.
All right, that was the big reason for the fall in global markets. But on to the other big story of the day. As the Modi government gears up for its second union budget, the Finance Minister Arun Jaitley today held pre-budget consultations with industry and trade groups. During the meeting, heads of industry bodies like CII, FICCI and ASSOCHAM urged the Finance Minister to do away with the minimum alternate tax for manufacturing sector to boost India's manufacturing activity. Now, industry chambers also pressed for a stable tax policy and a quick rollout of the goods and services tax. And they also sought clarity in the government's FDI policy across sectors. The Finance Minister on his part told the heads of the industry bodies that the government believes the budget is not needed to announce policy decisions, as key decisions are in any case being taken by the government all through the year. Listen in.
So we appreciate over the last 7 months, government has made many changes which are positive for economic growth. It takes time to get the results on the ground. We appreciate that. But at least the initiation has started. The FM has mentioned over and over again that budget day is not the only day when you make changes for economic growth. He's saying we make changes on 365 days of the year. Second point, I think, which is important, is a statement made by the FM. He said we are pro-business and we are pro-poor. That unless you get business going, you can't get incomes, you can't get consumption, you can't get tax bases. I think the industry and the economy needs a fiscal stimulus. I think there is a requirement to give a boost to economic activity. I think that's the important part of it. We have made some suggestions right now vis-a-vis investment allowance. We have made some suggestions vis-a-vis savings. We have made suggestions vis-a-vis increasing infrastructure expenditure. I think these are suggestions we feel will give a boost to the economy, which ultimately helps the common man.
Atmospherics in the meeting, including the opening comments the finance minister made in terms of, the economic confidence, the conviction, the fact that there is a growth stimulus which is required in the economy, that there should be restoration of the investment and capital formation cycle, and the de-risking of the infrastructure sector in its entirety. So I think the priorities seem to be fairly well spelled out, and there were very specific recommendations that were made.
What I requested was a rationalization of the tax regime. there is a revenue target that is given to tax officers, and they actually, because they have to attain that, they often use irrational tax demands. The recommendation was that the tax officers should be judged on their performance, not on their achievement of targets. That was one. And the other was that the cost of capital is very high, and we request that there should be some relief on the interest rate.
Well, there were various industry representatives in there and trade federations, and everybody gave their opinion on what needs to be done. I think there's a lot of sincerity and commitment to getting things done in the budget. So we've given all our suggestions, and we hope to see the best.
All right, that's India Inc. keeping its date with the finance minister at North Block. Time for a break, but coming up on the other side, some more opinion on today's market fall and how to play through it. We'll get you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.